Alan, welcome to the podcast.
Thanks very much, Jake.
That's my pleasure. I was kind of digging around in potentially upgrading a long lost Zoom account just now, going like, shit, we got to get this going. And there's a couple of technical issues with Riverside sometimes, but no, it's great to have figured it out and have a whole hour to talk. So, Alan, I'm going to kick you off with what might be a slightly longer answer than it initially appears, but why is Bitcoin Venice?
um, it's not
and can you answer in a whole book?
It is the simple answer, but it's proven very effective clickbait. So I'm happy with that. I was actually just having this conversation with somebody on Signal literally yesterday. I won't dox who they are, but someone who I've known for a long time, but who only got the book very recently, and they were asking why it's called that because I guess they haven't got to the chapter that is called Bitcoin Is Venice, which obviously is based on, it's relatively unchanged from the essay Bitcoin Is Venice, is like halfway through the book. So they obviously haven't hit that point yet, and they're wondering what on earth is going on here. And I tended to agree with them. I basically just said, yeah, the subtitle, which is Essays on the Past and Future of Capitalism, is a far better name, or at least a far better description. The book is only called Bitcoin Is Venice because the essay had such good brand value that we wanted to tap into that. So hopefully that clears up a little bit of that confusion. I can assume that you were instead asking about the essay and trying to give a more serious.
Well, I was just, it was anything is, there's no wrong answer, but I loved the book. Basically, I thought it was.
Thank you.
It's really one of my absolute favorite reads, and for someone that hasn't read it yet, I encourage you to go and do so. But it was pretty simple, that the historical framing of a period of history when Venice was something that you kind of read about in history books, and it's like, why was Venice so important at that time? And then it's put in context for now, and you're like, maybe this is more of a big deal than I thought. Do you know what I mean?
Yeah,
Somehow it's easy to peg historical references to modern situations.
Yes. Well, so I can tease this out a little bit. I do encourage, or I guess rather I discourage taking this too seriously. And even in the original essay, in the chapter in the book, in this section in the chapter, I think I say we because I have a co-author. I think we're pretty clear that we don't mean anything remotely literal by this. We don't even really encourage reading into it too much. It's more just that there are an amusing number of similarities between medieval, early Renaissance Venice and Bitcoin. And there are, you can make these kind of amusing analogies. Bitcoin, I think, is particularly susceptible to this, to the point where a lot of people get annoyed by it, like saying, "Oh, Bitcoin is this, Bitcoin is that, Bitcoin is everything." You can claim Bitcoin is anything you want, I think. But what struck me years and years ago, before even writing it, like what moved me to write it in the first place, was that there seemed to be so many of these amusing overlaps that maybe there was something a bit more there. Not that it's that profound. I don't think that's the claim I'm making. More just that it's worth contemplating to catalyze more of an interest in Bitcoin itself. I think that's sort of the frame of reference I assume most people are coming from, that they maybe know something. Maybe they don't know that much at all, but they're at least aware of the historical significance of Venice, and therefore that can be a way to hook them into also caring about Bitcoin. So I'll give a couple of examples of what these similarities are. So I think the most obvious one, the easiest one to grapple with, is that due to a combination of, I'd say, fundamentally geography and then the state of military technology for a very long time, for hundreds and hundreds of years, Venice was extremely difficult to attack. It was very, very costly to attack, more specifically, and very, very cheap to defend. And this is most of the reason, I would say. There's, you throw in other interesting reasons as well, but this is, say, a necessary but insufficient condition for Venice's historical success, economically, politically, culturally, however you want to conceive of it. all of which are obviously interlinked. And that is also true of Bitcoin, albeit for completely different reasons. So playing down the literal overlap here, but once you acknowledge that, there are, I think, interesting lessons from what that meant for Venice that potentially are relevant to Bitcoin. So, in a nutshell, just to be clear, I don't claim to be a kind of a historian by any means, so I'm not treating myself as an authority on this. I can give resources for people who want to chase down, better sources on this themselves. But in a nutshell, that enabled Venetian society to focus on commerce as opposed to needing to direct resources to conflict, because it was so cheap. So they needed to direct some, but very, very little relative to or as compared to their contemporaries at the time in the region. I mean, really, potentially in all of world history, Venice is a massive outlier in terms of what it was able to achieve. And what you see as a result is, as I mentioned before, the flowering of commerce, enormous in language that we would use now, and that we actually try to focus on in a lot of the explanation we're giving more broadly in the book. It enabled unprecedented capital accumulation, which in turn basically enabled the Renaissance. I'm obviously skipping over a lot of details here, but the Renaissance as a cultural event, almost entirely driven at the outset, at least, by Venice and Florence, because they had all this excess wealth, effectively, which arguably wouldn't really have been possible were it not for this interesting combination of factors. Again, in Venice's case, largely due to geography and military technology. That then lends itself to thinking, though, well, what if anything will be similar with Bitcoin? And I obviously that starting point is completely different. There's no such thing as a geography of Bitcoin. The military technology component, you can maybe start to make some useful analogies there, in the sense of what it means for it to be cheap to defend Bitcoin, what it means for it to be costly to attack Bitcoin. But I think the reason for hope, ultimately the reason that this is an interesting comparison to be thinking about in the first place is, will it similarly prompt a focus on directing energy towards productive enterprises, let's say? So that's another way of arriving at capital accumulation, as opposed to conflict, as opposed to politics. Does it free people from needing to worry, not entirely, but as much, let's say, about defending themselves from physical violence? And does it free them up to direct their energies towards being productive instead? So that's one. I don't know if you have any questions on that. There's a few more that get even wackier.
Please go for keep going, Alan, because I love this. The context is brilliant. So yeah, so that's essentially the difficulty to attack, and please fire away like some other ones that come to mind.
Sure, yeah. Well, they get weirder as you go more and more down the list. So I think the next kind of easiest one to follow, the governance procedures in both. And you have to think about this at a fairly high level to really see the overlap, because I'd say it gets even more removed from the comparison around security, where a lot of it does translate, at least conceptually. You're talking about the same kind of thing. The governance of Renaissance Venice is obviously it's a political institution that is very easy to compare to any other political institution, whether today or at any other point in history. Bitcoin isn't really a political institution. It's interesting. This is its own potentially massive rabbit hole that I wouldn't even really be the best person to be discussing. But how Bitcoin is governed is, I think, entirely novel, as almost as like an anthropological exercise in analyzing it. There has never been any institution like this before, and yet one characteristic that it does have, I think it's very clear that it has this in its own right, but it's also very interesting that it has this overlap with Venice too, is that it's very well. Two things that are somewhat related. It's very opaque in terms of describing exactly how it works, to the point that the only really sensible thing you can say, if you're not getting kind of endlessly bogged down in the weeds of who has what influence and how all the influences interact, is that it's by default extremely conservative, with a small c, not in a political sense, as in resistant to change. It's very, very resistant to change, and changes only typically happen if almost everybody agrees that they're a good idea. So not necessarily every single person involved, but you have this concept of rough consensus that almost everybody needs to be seen to agree for it to be a good idea to try to change it in any way. And Venice is very similar. So it was also, small c, very conservative as a political institution. But I think even the more amusing part is where that comes from, which is that the governance process was extremely opaque. Now, I think one obvious difference to Bitcoin is that it was still at least kind of well defined, right? It was kind of deterministic, and this is what makes Bitcoin interesting, that it isn't really well defined. So that is a difference in terms of like there's what would you call it, like a procedure, almost like an algorithm for selecting who ends up with what responsibilities. But again, even with that caveat, it is similar to the process in Bitcoin in that it's so convoluted that it's basically impossible to try to game it. And so what you find historically is that there are occasionally efforts to game it, but they almost invariably fail. And the only reliable way to assume that there will be any kind of deviation from intrinsically conservative policy is when there's something that almost everybody agrees on. So you again have this nobody called it that in that context, or at least not that I'm aware of. Nobody's ever said that is rough consensus, but the parallel to Bitcoin is really interesting. And just to give an example of what I even mean by this, like, incredibly opaque process, because it is quite funny. I don't even remember the numbers. So what I'm about to say, I'm making up the numbers, but because I don't like, it's impossible to remember these unless you are an economic historian of Venice or whatever. But it's more the principle that's interesting here. In selecting the Doge, so the Doge is basically like the king. In selecting the Doge, you have something like the following, right? So you have these two councils of various ranks of nobles within Venice. So it's an aristocracy, to be clear. It's not democratic in the modern sense. But you have two different tiers. And the top tier amongst themselves elect, I think there's like 500 or so of them, and they select, call it 40 of themselves. And then the bottom tier elects, I don't know, another 10. And then that 50 get together, and then they elect 30 of that combined 50. And then back to the top tier, that top tier then selects 20 of that 30. And then that 20 selects 50 from everyone in the top tier who isn't in that 20. And this just like goes on. There's like 10 rounds of this, of these people selecting these people who then select these people. And the point being that there's also some randomness involved as well, like at various points in terms of deciding who these people are going to be. It's drawn from lot, so it's not always selecting. And it's just insane to follow and to try to manipulate the process. Like, basically the only way of manipulating this process such that you even have some hope of knowing in advance who is going to be selected Doge is that everyone agrees who should be selected Doge. So going through the whole thing is kind of a formality. So that's also, we don't have a Doge in Bitcoin.
Yes, and so the point being is that it was difficult to corrupt the governance.
Extremely difficult, yeah.
Yeah, so if you and I were buddies and we were one of 2 out of 500, it's like, cool, let's try and get you in, or you try and get me in, and I'll give you a backhander for the next ship that's going to sail to Greece or whatever.
Yeah. And actually, now to think about it, even that can be teased out a little bit more in terms of what the implication is. It's not at all to say that the government as a whole couldn't be corrupt. Of course, any government, any institution can ultimately end up corrupt. The point is to try to pit competing interests against one another such that overall incentives are aligned. And I think that there's a very obvious, very strong analog to how the governance process in Bitcoin works, that although it is significantly more opaque, you you do have this less well defined, but I think characteristically very similar kind of impossibility of pushing through a conspiracy, right? If there's any small group that is even thought to be conspiring to manipulate rough consensus, it's almost like there's a what do you call it, like an immune response that just gangs up on them and says, no, we're not doing that. And so again, slightly different in terms of the mechanics of this, but the end goal of things don't really happen unless everybody agrees. And they could still be bad things. Again, this is back to the point about corruption. I don't think either of these suggest, on the one hand, Venice was governed perfectly. On the other, the decision-making process in Bitcoin is perfect. But it's about as true to a default conservatism as possible. If bad decisions are made, it's only because everybody wanted those bad decisions.
And yeah, well, it's making me think how, in some ways, amusing the Bitcoin rabbit hole is. It's like, how am I talking about the very specific governance techniques of Venice? It's like, this is wild.
Yeah.
How did this happen? But it's somehow what I like about this kind of comparison that you make is it frames a historical period, like I said, that. So it's the history books we talk about. This is a big deal. You're like, oh, Bitcoin's a big deal too. And two other articles I think of that were similar for me and in this experience. So Jesse Myers wrote, I can't remember the title exactly, but he was talking about the pioneers that moved west from the Mississippi in
I know
North America.
I also forget the title, but I know the article you
mean. And it was just excellent and really kind of puts you in the mindset of like, hang on, we have really got no idea where we're about to go. But in hindsight, you can see the value that was created. And equally, Ter de Meester wrote an excellent piece about the Reformation. And they just really help you to go, well, hang on. So this is what's going on here. And it really makes you think about, okay, those were times that if you were in those times, you wouldn't have realized how serious a situation it was. And you suddenly you cover 30 years very, very quickly. Which for us, we're not going to fast forward a whole lifetime of professional work and squeeze it into one article. But I just wonder, what was it that made you draw that link? And did you somehow know something about Venice, or like you were just thinking about?
I don't find the backstory here all that interesting, to be honest. I feel like you're maybe fishing for something that's a lot more revelatory than it actually was. Literally, the story is as follows. I went to Venice on holiday as a dumb tourist that ruins it for everybody else. And when I was there, what's the best way to put this? Anyone who's been to Venice will know exactly what I mean. There's other places similar to this I've also been to. It's impossible to avoid the history. It's incredibly well preserved, and it's, if you do anything remotely touristy, and it's sort of like, why would you go if not to do that? You are overwhelmed with a sense of how old and how important it is, or it was. And so I did that. It was very nice. I came away thinking, I'm actually a little bit embarrassed. I don't know that much about this, especially having had the experience. It's very different. It's very different being there and feeling it than just reading it in a book. And so I came away from it thinking, oh, I should actually know more about this. And so basically I just bought a bunch of books about Venice, different books, books with different historical focuses about Venice. So some were more political, some were more economic. And the answer to your question is that in reading those, I found all these amusing connections and was like, I wonder if I can, I wonder if it's worth exploring these in writing. I think the answer is yes. But even at the time, it felt kind of, I don't know, silly in a way. But basically, the more I read about it, the more seriously I thought about it, the less silly it felt like it was. I do still think it's a little bit silly. I mean, I've said this a couple of times now, and again, we say it in the
it's
good.
It's good clickbait.
You shouldn't take it too seriously. It's not that there's some kind of profound connection here that we are insisting be understood better. It's more, I think, exactly as you say, it's that my ultimate goal even just with writing the very first essay, never mind, not knowing that it would end up being a book and we'd end up having this much broader thesis, etc., is just to use how interesting Venice is, and I think how, maybe more importantly, how accessible it is. Right? It's I don't think you're going to come across anyone who thinks that they don't possibly have the education to understand why Venice is important, but which is a very common thing with Bitcoin, by the way, to use that almost as an excuse. It's like, well, if you find this interesting, then I would suggest you should also find Bitcoin interesting. And even with everything else that's in the article, like, we've only focused on basically the title, right? Because Bitcoin is Venice is one section in the essay, Bitcoin is Venice, where we make a bunch of other similar comparisons. I think the Venice one is kind of the most romantic, like the least to be taken literally. But the point is similar with every other analogy that we're making. It's just to trick people into finding Bitcoin interesting. That's basically it.
And it works. I think
it was like I said right at the start, it's clickbait.
The best memes have encapsulated within them deeper meaning, and that's essentially what it is. And what I'd like to do next then is talk about, a simple question like, what is capital? And so when you talk about capital accumulation that the Venetians were able to do, that's one example, obviously. But through your book, it really hammered home some simple truths that I hadn't quite considered in the same way before. So what does capital mean to you? Can I just
start off by saying actually that I'm glad, because that means the book kind of worked in a way.
Yes.
So the whole exercise of writing the book, I mentioned before, the Bitcoin is Venice is clickbait as a title. A better, maybe not good title, but certainly a better description is Essays on the Past and Future of Capitalism. And thinking back in the process of writing it, so again, I mentioned I had a co-author, a good friend of mine, Sasha. As we were writing it, basically what we were trying to do, we were almost using Bitcoin as a conduit to say everything about capital that we had ever wanted to say, that we'd been talking about to each other for like 5 years at that point. Wow. And the hook, I think, ultimately ended up being that sound money is critical to understanding capital, or at least it's critical to the operation of capital. You can maybe understand capital somewhat out of context, but you certainly understand it better if you also understand sound money. And therefore, we could have, I guess we, in theory, could have written a similar book without mention of Bitcoin and maybe use gold as the exemplar, but it would have been nowhere near as interesting, because I think Bitcoin is significantly more interesting than gold. So that's kind of the order of how the clickbait works, right? It's like, we get you with Bitcoin. Via Bitcoin, we get you to appreciate sound money. Via sound money, we get you to appreciate capital. So as I think you're correct. I'm glad that's what you took from it, that the book is really about capital. So what is that? There are many, many different ways you can approach this. I think a decent amount of the book is kind of romanticizing it a little bit, like drawing out, similar to what I just described with Bitcoin and Venice. That maybe is one of the more extreme examples, but drawing out our analysis of capital beyond just straightforward economic examples. Again, the point there is similar. It's not to try to communicate any kind of profound connection that we think ought to be better understood. It's that we think merely understanding economic capital is so valuable that it can then shed light on other areas
what's
of
real?
What would you call it? Like social interactions. And maybe it goes the other way too, that if you already have some appreciation of these other interactions, to kind of ground it in economics is really just saying they're tools. Like, just as a one-word answer, capital is tools. So if one decides that rather than just consuming, so the classic example here, from like economics textbooks is fish, right? So you can catch fish with your hands. And you decide to spend your time not catching fish with your hands, not just consuming, but instead constructing, a net or a fishing rod, then you have created capital. The point being that you're doing kind of an act of proto saving, in the sense that you don't yet have money, so it's not saving in kind of a strict sense that requires money, but you're kind of emulating what you would be doing with money if you had it, which is that you're abstaining from consumption now in order to not just, for example, have leisure, right? It's in some sense all leisure is consumption anyway, but instead to devote the time and the energy to creating tools that will allow you to consume more later. And this is kind of the key insight that ties really any interpretation of capital together. You can get a lot more elaborate, even just within the realms of economics, and how you're characterizing it. And then, as I mentioned in the book, we kind of push that much further in other realms as well. But it's ultimately about abstaining from consumption now, or really from anything now. Again, if you want to have it a slightly more abstract treatment, abstaining now so as to directly enable more abundance in the future. So that's basically what it is. I mean, I'll throw in one other thing that you may want to, there's different threads here you might want to pick up on, but one framing of capital that I really, really like, we say this in the book, I've said it elsewhere, I've said it podcasts, different essays, whatever, is from an economist called Hernando de Soto, who's still around actually. He's I believe is he Chilean or maybe Peruvian? I think he's Peruvian. And I think he actually ran for the president of Peru not too long ago. But anyway, he wrote a book in, I believe, the early 90s called The Mystery of Capital, which I highly, highly recommend. We cite it several times in Bitcoin Is Venice. And his description of capital, which, to be clear, this is not a definition. This is more like a description, I guess. It's I think more rhetorically powerful than anything else. He describes it as economic potential energy, which I really, really like. I come back to this a lot. I think it's a very, very helpful framing. To my mind, I mean, maybe it's not for everybody, but to my mind, it captures that every human action expends energy. And instead of that energy just immediately dissipating on, something that you're enjoying, on some consumptive activity, you're storing it up so as to release it later in a more directed, more powerful way than would be possible if you did it, just at the moment of you expending the energy in the first place. I really, really like this. It's obviously not perfect as a kind of almost mechanical analogy, but I think it gets you really far in appreciating all kinds of elements that are, as I mentioned before, kind of obscured by the fiat propaganda that everyone is more used to thinking about this in terms of.
I went to Leeds Uni and took a business management degree, so like highly Keynesian influenced. And 10 years later, I find myself reading your book. I'm like, this is actually useful. It sounds crazy, but
you might be the first person to ever call it useful. It's we always take pride in it being perfectly theoretical with no applications whatsoever. But I'm glad to hear that. That's good feedback.
It's how things actually work. You sit down in a when you're like the MMA examples that you use for one instance. And I'm particularly thinking about the section where you talk about capital stock and capital flows. And that was like something I'd not really thought through so succinctly before. And I'm glad you mentioned Hernan de Soto, because as I read your book, I'm like, this is brilliant. What's this guy been reading? And like down the rabbit hole you go. And so I bought The Mystery of Capital.
Yeah, a lot of people have said that. And that was deliberate, I think, just without drawing too much attention to it, that really it's like the bibliography is what's valuable. I honestly think the whole book, let me see if I can remember everybody now. The whole book is probably a condensation of De Soto, Hayek, Wendell Berry, Jane Jacobs, probably a few other people. I think they're the most important ones though. So if we can like nudge people to go, James Scott, he's actually maybe the most important one. I should have thought of him first. If we can Scott and Jacobs and Hayek pill people, that's the best outcome of all.
And it's so cool of the research process, how you uncover one thing, okay, that's cool. Well, hang on, what were they reading? Then you go down another hole, and in particular, the Mystery of Capital what was so revealing was that idea of like private property rights at the very,
Hmm.
very base of the accumulation of capital.
Hmm.
And like I thought I lived in a free market growing up in England. I thought that, private property was like owning a house or whatever. But is it? And how quickly can those
Hmm.
things be corrupted if someone is a nefarious actor against you? And there's many things that have happened even in the last 5 years that show you that, property can be taken off you very easily. And this
Hmm.
idea of then having a seed phrase with your Bitcoin, going back
Yep.
to your Venice
Yep.
analogy of like how well defended that is,
Yeah.
especially if you're anon with no KYC Bitcoin, like how are you ever going to find that? It's just not even worth
Yeah.
looking for.
Yeah.
And
Yeah,
it's only
exactly.
with these kind
It's
of
not
real world
worth
examples.
expending violence on trying to
Yeah.
engage with an anonymous no KYC Bitcoin user. Your only option to engage with that person is productively, which is
Yeah.
amazing. This is I can't emphasize enough, as jargony as this all sounds, how profoundly positive this is for civilization.
Mm. And so to draw on that, then, in an environment in which we talk about how the Venetians were able to accumulate capital, less politics, hard to attack, so less time involved in military issues, and commerce became the main focus. We've seen, America bombing Iran, and the Doge experiment in America has been like quietly kind of like, oh yeah, we tried austerity, but
Mm,
now we're not going to talk about it. It's all politics and lots of warfare, like the
yep.
opposite of capital accumulation, as we've kind of discussed it here. So, in your mind, Alan, are we seeing the green shoots of something very different with Bitcoin? And what are some examples of where this thing's going?
I think so. I try not to opine too much on contemporary politics. I mean, I do occasionally, but only really to kind of make fun of things
Yeah,
in their own
I
right,
like
not so
your
much
fiat
not so
fuckery
much
stuff. It's
to
so
relate
good.
them to Bitcoin. Um, I think. Well, here's a really interesting framing of all of this. I nearly touched on this earlier. I forget what you said. You said something that reminded me of this, but I moved on without addressing it explicitly. That um, one really helpful way of framing a huge amount about Bitcoin. This is applicable to all kinds of different ways that you can talk about it, is to insist that it isn't new. So obviously, some components of it are new, right? It's software. It's an internet protocol. It relies on all kinds of like mathematics, essentially, that didn't exist more than 50 years ago. You have to acknowledge that all of this is intrinsic to how it works and to why we hope it'll be successful. But in terms of the consequences of it succeeding, not only do I think it's true, but maybe more importantly, I think it's better rhetoric. Like it's better for convincing people that it's true, that what it will lead to is fundamentally old. Basically, that's probably the simplest way of putting it. It's the undoing of a lot of very modern, awful experiments. So one interesting way of framing this is you'll hear people talk about Bitcoin is only, what is it now, 16 years old, something like that. Um, Fiat, as we know it today, is only about 50 years old, and this is a good thing to draw people's attention to if they aren't as far down the rabbit hole as we are, because my impression, probably everybody has some kind of sample bias in this, but necessarily anecdotally, my impression is that I was going to say no coiners. I'm not sure that's the most polite way non-Bitcoiners, right? Pre-coiners, we
Yeah,
should say. um, they tend to think of fiat as being kind of eternal, almost. They wouldn't articulate it that way, but
yeah,
they haven't
yeah. My
thought
great
at all
grandparents
about
used
how
it. Like,
it's
why wouldn't
completely
I?
obfuscated for them how new it really is. um and so, to get back to your question, what will come from Bitcoin? This is maybe another reason that the Venice analogy is appealing. uh I don't think that much that comes from Bitcoin really is all that new. I mean, there's some elements that are interesting that, again, almost certainly rely on on it being software, right? On some or other, it's something that you can extrapolate from like programmable money. Like there's cool stuff there for sure. But to my mind, by far the most civilizationally, I'm not sure if that's a word. Uh, so some of the consequences that are the most important to civilization are really just about undoing fiat. It's about there now being an off ramp to the horrible, horrible experiment of fiat, such that things can go back to the way they were for all of human history before that.
Mm. And that's actually a really wonderful framing. I haven't even really thought about it. It's kind of unfair, isn't it? The British pound, just to use an example, what I grew up with, it's the same name, but under the hood it's different. And so
Oh yeah,
that's to
yeah,
your
yeah.
point, right? The 50 years or so that we've been off the gold standard in the States filtered straight through because the pound was linked to the US dollar, post World War II set up. And it's not till you dig in the weeds, it's like, well, hang on. So basically they kept the brand, but they
Mhm.
changed the design.
Yeah.
And
It is quite funny too, because I can see the gears turning in your head about what points in time you want to be referring to, that Bitcoiners by and large know the history of fiat like to a T. Like they can
yeah,
recite exactly what happened when. And then I've seen this happen. I've probably done it myself a number of times, again with I'll say pre-coiners rather than no coiners, just how completely bemused they are. One, that this is all true, like they've never heard this information before. But then there's like a meta layer of, but wait a minute, how do you even know this? And you can see their gears turning as well. Like, wait a minute, have I been scammed? Like, yes, you
yeah,
have been scammed.
yeah.
I'm sorry.
It's brutal. And so, Alan, what I love about these conversations is, well, first of all, I loved your book, so it's really cool to get to speak to you. But you're now investing with Axiom. And it's
Mhm.
like, okay, so here's someone who's thought very long and hard about like what capital actually is and clearly understands Bitcoin itself inside out. What are they doing now? And of course, you've raised a fund and you're buying equity positions in early stage companies. Just a general question to start that off. How did you get into that? And why was it
Yeah.
something you wanted to
So
do?
even the way the way you set up that question, I was thinking I would need to immediately clarify the following, but it turns out to be quite a nice answer anyway. That my career was as an investor anyway, right? I've worked for an asset management company since graduating from university, so in some sense, it was a very straightforward transition for me. I had the skill set to do it, but I also somewhat obviously probably had the motivation to do it, because I find what we do now to be much more, I don't want to sound too kind of bleeding heart about it, but it's obviously much more mission driven than what I had been doing before. It's much more
Yeah,
meaningful to me.
means a lot more to you.
To clarify, not at all to suggest that anybody else should care about this. I don't want to pat on the back for the amazing work I'm doing for humanity or anything, but within, assuming that I want to work as a professional investor, this is by far the most meaningful way that I can do that for myself. But also, I think probably the more important point, the reason for wanting to make the change, because it was quite a, I don't make it too much about like my biography, but it was a pretty big shift moving from massive company, super cushy 9 to 5 job to effectively working for myself. Um, the main inspiration for that was just finding it so much more interesting, right? Which I think is probably unsurprising to anyone who's even a little bit down the Bitcoin rabbit hole. But just being able to spend my time thinking about the implications of Bitcoin rather than what I was doing in my previous job, which I did really like for what it's worth. Like I didn't rage quit it or anything. I wasn't looking for a way out. I just I was pulled, right? It was a pull rather than a push.
Awesome. But that's a great way to start. And I must say, it's always something that struck me with your story, because I've listened to some other podcasts as well, is the business you're working for is a very well-known, like long-term investor that
Mhm.
it's only inevitable that when Bitcoin was created, someone was going to come through the ranks there that was being nurtured to think about investing capital in a certain way, was going to find Bitcoin, get irritated by it enough times to actually research what it is, and then be like, sorry, guys, this is what you need to be putting money into.
Mhm.
So I'm just intrigued as to like the culture within the business, and were you very much encouraged to start looking at something like Bitcoin, and did what you learned there
Yeah,
help you
I
see
mean,
it for what it is?
for what it's worth, I'm on very good terms with my former employer. I have a huge admiration for them. The worth clarifying as well, I left primarily because what I'm doing now is far too small for them to take seriously. They're an enormous business.
Yeah.
So even there, people might be thinking like, oh, I didn't get my way there or whatever. Like there's none of that at all. I was very happy in that job. Um, I left because it wouldn't make sense for me to do what I'm doing now while still working there. It just didn't, the magnitudes of money being deployed wouldn't add up. Um, but just to speak to the culture of the business as a whole, I'd actually go even a little bit further than what you mentioned, in that their what would you call it, investment philosophy, and maybe even more broadly than that, their attitude towards finance, to what the point of financial markets are, I think actually helped me understand Bitcoin. At the margin, like I was interested in Bitcoin when I joined there. I got into Bitcoin when I was still in university. Um, and obviously nothing that was ever discussed there had anything to do with the technical component of it, but the way they think about, yeah, what the point of any financial intermediation is, what the point of investing is. There's a lot there that lends itself to an appreciation of sound money. I think that comes full circle to the book as well. So worth saying, I don't think I mentioned this before, that Sasha, the co-author, I know him from this company. We started it the same day. We had the same job there.
No way.
We were in that graduate intake.
Cool.
He still works there. He really likes it. He's I think isn't quite as compelled as I felt at the time to go full time into Bitcoin, but I mean, he's obviously very interested in it. And yeah, I basically can't speak highly enough of them. And I think it's just a final thing to mention there. It's very rare that for any business of even remotely that size in asset management, probably in finance more broadly, to have that attitude. And so I would tend to agree with you that I pushed it a bit further in saying that it ended up being instrumental to me appreciating Bitcoin even more than I would have otherwise. But it probably also was inevitable that they would, that they would pick it up. If anything, I'd maybe flip it from the way you described it. I think they would have got it even if I hadn't been there, because the culture just inculcates that way of thinking about the relevant topics. And there are loads of people there who still like it. I'm a bit of an anomaly in terms of both being as public as I am and then leaving to do what I did.
Yeah, and you really went for it. It's so cool. I always love trying to draw the dots between like, so what were you doing when, and like, how did you think, okay, this is cool, and all that stuff. That's not necessarily where I want to take the conversation next, though. But it's always fun to understand what people were doing before.
Mhm.
So when you're looking for companies, so anyone out there, like check out Axiom, obviously, and support Alan where you can. The question I have for you is like, how do you analyze an early stage opportunity?
Yeah, that's a really interesting question. I don't think the answer has a huge amount to do with Bitcoin, to be honest. Other than it does in one critical way, which is how we determine the attractiveness of a valuation. So the way there's more detail than this. I think it would probably bore the audience to go into too much detail, but the kind of the TLDR is we need to be able to construct a plausible bull case, keeping in mind how intrinsically uncertain all of this is, right? It's not like we can actually predict what's going to happen or model what's going to happen, but we need to construct a plausible bull case in which the company outperforms Bitcoin in dollar terms. The reason being, I guess this is probably generalizable to any any capital allocation. Like this is something that more and more people are going to have to internalize, that you can just buy Bitcoin like that. You can if you use Bitcoin as your savings technology, you necessarily become much more disciplined in how you think about allocating capital, which is also a very good thing. This is like back to, this is an immense benefit to civilization. In our case, it's maybe a bit more a bit more, what would you say, constrained. It's less kind of grandiose. The reasoning for this, that our own clients in the venture fund can just go buy Bitcoin themselves, right? And we don't hold, crucially, we don't hold Bitcoin in the fund, precisely to avoid this conflict of interest. That is, obviously, we're extremely bullish on Bitcoin, but there's no point us charging a fee to hold Bitcoin when LPs can just hold Bitcoin themselves. So we strongly encourage them to do that. And then also, even layering on top of that, there's no plausible scenario in which Bitcoin does poorly and yet we somehow do well. So you kind of have to assume that anybody investing in us already very strongly believes in Bitcoin, and their thesis is a bit further along. So it's basically feeding that through right to the level of the investment, that we don't hold Bitcoin because the LPs can do that. Therefore, it makes sense for us to think of Bitcoin as our cost of capital and encourage LPs to think of it as their cost of capital, not just in dealing with us, but frankly in dealing with everything. Therefore, we need to have we can't in good faith guarantee such a thing, but a plausible approach to outperforming Bitcoin. Otherwise, there's no point in doing any of this. And so that has to be reflected at the level of the individual investments. So that's probably the only link to Bitcoin. Other than that, I'm not sure that there's a great, or at least even interesting way of describing how we analyze companies, because it's frankly pretty textbook stuff. It's, a mix of trying to come to terms with what they're, understanding their business model, understanding what market they're in, how they're likely to evolve, what kind of sustainable competitive advantage they are even in principle able to develop, such that, if they do start to succeed, will they attract competition that compresses their own returns? I mean, this is all entire, none of this is new. This is just like if you Google, and not even how do you invest in venture, just how do you invest in equity. This is all straightforward. I think where we have an advantage really is around the Bitcoin side for a number of reasons. So there's interesting disambiguation there, right? That the actual analysis we're doing has very little to do with Bitcoin, because these are just companies, other than the valuation point. But that is what ties it back to why we think what we're doing is valuable, because Bitcoin is so poorly understood broadly that the vast majority of companies that we look at struggle to raise effectively, other than from people just like us, because anybody else that they might raise from, any kind of traditional, somewhat institutionalized source of appropriate capital for them, either doesn't understand Bitcoin, or worse and a lot more common, thinks they understand crypto and will do things like, you have no idea how many times I've heard exactly the following story, that some Bitcoin startup was speaking to a crypto VC, and within the first 5 minutes, it's, so when are you going to launch a token? Like, oh, we're not going to launch a token. Oh, why aren't you going to launch a token? It's just like, this entire conversation is a waste of everybody's time. That influence is so pervasive and has been so corrupting that basically the value that we bring is as simple as understanding what they're doing. Like that's where the Bitcoin component matters much more, is that when they present to us what it is they're building, I can bring it back to Bitcoin Is Venice and make it kind of more romantic, right? Like, what capital are they intending to accumulate around Bitcoin, right? We are well positioned to evaluate how good of an idea that is, how much that makes sense.
And you wouldn't, without a good understanding for what Bitcoin is, then you just wouldn't understand what a good Bitcoin opportunity looks like. Is the technology that they're creating actually useful? You know what I mean? It would be like when are you producing your token? Come on, I want to rug pull the retail market and outpace everyone.
I've described it this way before without meaning to be kind of overly self-deprecating, but I think that what we're doing is kind of a form of temporal arbitrage, in a sense, in that it seems obvious. Now, again, keeping in mind that there's massive uncertainty here. I'm sure a huge number of the companies we invest in will go to zero, because that's entirely typical of venture. What's interesting, though, is that we have the Bitcoin tailwind. So I'm pretty hopeful that these numbers will be dramatically skewed upwards, certainly in dollar terms, but ideally also in Bitcoin terms. So, with that as kind of the setting as to why I think it's appropriate to do this at all or take it seriously as an investment opportunity, I think the reason that the opportunity even exists is purely this lack of understanding. So if we're right, entirely broadly speaking, like without being too specific about what that means, the way we benefit from this is that here's like an interesting way of thinking about it, that everything is dramatically mispriced now, right? So that's the nature of the arbitrage, right? We're getting cheap. All these investment opportunities extremely cheap because far fewer people than should actually understand them. And in 10 years, they will understand them, and therefore they'll be repriced. And so we're catching that arbitrage, and eventually we'll put ourselves out of work. I don't know if that's actually what's going to happen, but that's kind of like a nicely romantic way of framing it.
But that in some ways is the point, where there's different types of capital creation, and venture is just one area that you can try and create returns. What I've really enjoyed about following the journey of Axiom is I did some angel investing back in 2017-18 period. And at the time, it was very different. I was looking for clean tech companies. So like one evolves massively. But I haven't done any for over 5 years. And the Atlantis deal that's currently happening on the crowd fund is the first one I'm going to potentially have done in ages. And it's cool to see you guys already in there as shareholders. But it's not the only company that I'm like, that would have been a good bet. And I wasn't doing it at the time. And it's like, oh, Alan's put some money in there. What a surprise. So it's like slightly ahead of me in that sense. And I have yet to put any money with any VC funds. But precisely what you've just described, as I sit here thinking about it, is what I would want. It's like you've got someone with deep industry expertise and connections placing bets on something that may or may not work. But like, what if they do?
Yeah.
And that's just a piece of the portfolio allocation.
What would be really funny here, I don't know how much of I completely understand if you don't want to divert 10, 20 minutes of the podcast to this, but this is kind of an
we can go anywhere you like, Alan.
Together some of these threads. I have this theory that has been crystallizing for me the more I've been involved in this professionally. So just to be clear, in my previous role, you wouldn't describe that as venture capital, right? My previous employer was not a VC. They were an investor or investment firm, investment manager, but they weren't doing VC. And the more I've been involved, the more I have become firmer in my belief that venture capital as an industry is extremely fiat. And by that, I don't just mean, I do mean this, but I don't just mean that, the standard kind of Silicon Valley trope around VC does fiat things. So that is true, I think. I think it's more fundamental than that, though. It's like a huge amount of it, call it 90%, say, only even exists because of fiat. And that's actually what causes the downstream effects I just mentioned of, where their focus is and how they operate and so on, and it being kind of superficially, aesthetically characterized as fiat. That's true because it is fundamentally fiat too. I can explain what I mean by that. You may just get it instinctively. I don't know.
Well, I think where you're going slightly, but to name some experiences I had that summarize what I think you mean by that. So I went through a program called Entrepreneur First, and I went through another program called Antler, and they call themselves talent investors, and they've got funds behind them where they basically put 100 people in a room together for 3 months. They say at the end of these 3 months, you've got to come out with a co-founder with shared skills. I want to see a business plan that's the next Google. And they go and put, I don't know, an investment of 100 grand in exchange for 10%, and you got a stipend. So you were slightly paid for being there. Fascinating experience, but I hadn't really gone down the Bitcoin rabbit hole at the time. It's like 2019, and there was just money everywhere. It's like, what are these guys doing that means this is possible? And in hindsight, it's fiat. It's like there's just fiat, the money printers going bananas, and early stage, like a pre-seed. And that's why the size of these funding rounds have changed, right? Because the denominator is just disintegrating.
Yep.
So how much is a pre-seed round? Oh, well, it used to be like 150 grand. Now it's 500 grand. At what valuation? Oh, well, it used to be $1 million. Now it's 10 million. Like, what's going on here? And
Yeah.
on paper, it's like value's created and we're all getting rich. But the reality is
Yeah.
the the failure rate's extraordinarily high.
It's I'd say it's
And
nice. It's nice that you've gone through that. I mean, besides hopefully you didn't suffer any financial losses as a result, but
a couple of failures, of course, but
but I would very strongly suggest and feel free to obviously correct this if you think I'm wrong or elaborate on it if you think I'm right. That experience, especially now having become a Bitcoiner, gives you very good insight into capital misallocation, right? Because
yes.
that entire process is institutionalized misallocation of capital, bidding up resources, and basically like you just witnessed inflation. You saw the cogs of inflation turning.
Mm. You just don't really realize. But where I think this is cool is there's an opportunity here to rewrite what venture actually means. And I think you're already walking this path with what you're doing with Axiom. But the businesses that you're putting money into are built on top of sound money. And the
Mm-hmm.
business itself, you might not be holding Bitcoin in the fund. I think that's great, by the way. I wouldn't like. What's the point of giving a venture fund money to just hold Bitcoin? I can do that myself. But what I can't necessarily do is find and execute on great opportunities alone.
Mm-hmm.
And that's where it becomes interesting. But the businesses themselves, they could have Bitcoin on the balance sheet. Why
Yep.
not? And how
Yep.
does that
Yeah,
change the
we see this
return
all the time.
profile?
Yeah.
Right?
There is a really interesting angle there. So there's two completely different threads I can take here. I want to come back to the
Well,
one
let's just
about the
tell me
access,
both
the
of them. We'll come
expertise.
back to it.
Yeah. But this point about discipline and capital allocation, I think is really fascinating. So we don't, just to be clear, we don't have like a policy on this that we mandate our portfolio companies adhere to because everybody's in a different position. But we see this as, I think, just something that comes naturally to almost all of our investments at some or other point in their, the life cycle, let's say, of their companies, just given that they by and large are Bitcoiners themselves, so they have some kind of intrinsic appreciation of this. um, the exact point I was making about our cost of capital needing to be Bitcoin because we assume that that should be the case for the LPs, that is in fact also the case at the level of the companies as well. And so you see this in terms of how they invest, for lack of a better way of putting it. Like the entire point of what the companies are doing, as again, this is kind of like a weirdly abstract way of describing it, but given our conversation to this point, what they're doing is building tools, right? They're all in that bucket. It's kind of a weird way of talking about what they're doing, but they're taking the capital that we have allocated to them to try to build tools that will create more value in the long run than they consume in creating them, right? However, having not just the knowledge of, which is kind of by definition given the space that they're in, but obviously therefore the access to Bitcoin as well as this rapidly monetizing, was the Jesse Myers line, it's like once in a species
Yeah.
event. That dramatically changes their attitude to how they ought to go about creating these tools and ultimately how disciplined they ought to be. So this is yet another reason I mentioned before. I was thinking about it from a different perspective, but the point about how, what we expect our portfolio to look like in terms of its eventual performance, right? And there inevitably will be some that go to zero because we're investing at the riskiest stage, blah blah blah. That's all, boilerplate VC speak. On the one hand, you have the tailwind of Bitcoin that is pushing up the ones that would have been successes anyway. So we think we get disproportionate performance there. But then you have this point layered on top of it again, which I think is really, really fascinating and isn't widely discussed or understood. I mean, this conversation I'm having with you is maybe only the fourth or fifth time I've ever talked about this, that the attitude of the founders themselves as to how they allocate capital within their own business gives yet another tailwind, because this tying together yet another thread, it's undoing all of the ridiculous heuristics from fiat VC, which is you just throw money at everything and you hope for the best. And if it goes up 1,000x, that's great. And if it doesn't, you just do it again with something else because there is endless money for you to be playing with and misallocating. So this is actually a really nice concrete example of a way in which that is being undone, right? So it's back to this point that this element of it isn't new. This is old. This is all of human civilization until relatively recently. And we're now unwinding the free money capital misallocation spigot. Ultimately, obviously I have a selfish interest in this because I think at the end of the day, it's going to mean that our portfolio has yet another tailwind of at least dollar denominated outperformance. But the really exciting point is that it's obvious why that would start with Bitcoin companies, because it's just like a psychological thing that they're predisposed to, and they're disproportionately influenced by, given the space they're working in. But it's going to spread. I mentioned already that we encourage our LPs to think this way. I think this is a key part of, frankly, hyper Bitcoinization, or at least early, not quite hyper Bitcoinization. Bitcoin becoming normalized is people realizing this about what their opportunity cost actually is. So at the moment, that's more or less confined to the kind of companies we're looking at, but it is going to spread, and that's a very good thing.
I mean, opportunity cost catches me there in terms of what we touched on before about the stock to flow of capital, and just understanding that and how key it is. Like the opportunity cost here of not owning Bitcoin is like astronomically impactful on anyone actually trying to grow capital.
I think a good heuristic for understanding why fiat is so horrible, and by which I mean this isn't at all an explanation, but it's like a hack that will point you in the right direction almost no matter what the actual subject is, as long as fiat has something to do with it. Fiat tricks you into thinking there is no opportunity cost. Now, of course, there is an opportunity cost to everything, basically, because I don't know. I mean, because time is real. It's like one way of putting it. Like, time is a real thing. Your time is finite. Therefore, I'm skipping a lot of steps here, but therefore, there is an opportunity cost. In particular, there is an opportunity cost of capital. Fiat makes you think there is none. And as a result, bad things follow always, everywhere.
Just consistent misallocation as well. It's like, oh, no cost, never mind.
Yeah.
I'd love to just cycle back to what we were just on. So Alex Fetzi is actually a great example of this in my mind. One of the reasons why I want to get involved in the crowdfund they're doing now as a private investor is, like, if you read the Bushido of Bitcoin, and I haven't finished it yet, I admit, but it's a lot of really great insight on like the mindset of a warrior and how this culture developed. And in particular, I'm just working through a section that's about like the history of the samurai in Japan. But to me, it's like Alex is a guy who's thinking very, very deeply about honor and about integrity and about strength and about courage. But in today's environment, which is obviously very different to 200 years ago, 500 years ago. And so to your point, the tailwind of the mentality of the sound money backed founder is a whole different fucking ballgame. And I'm like, yes, please. That's actually something I can get behind. I'll get out of the way, do what you want with the money. I'll back you. But
I mean, especially
buying,
in contrast to the experience you described, right? Where you go through the accelerator and it's like, here's 100K to do whatever you want. Just go.
Well, and in that, when I think about that, what it was all about was how are you going to get the next rise of finance? It was never about, is this an actually interesting problem?
Which is also because money's free and there's no opportunity cost.
Is that profitable now? Who are you actually selling to? And there was ways of gaming your metrics. Of the angel investments I made 2017, 18, 19, I made nine different companies. I think now 4 have failed and 1 has exited, and I've still got 3 or 4 in the game. But the one that was doing really, really well was a business called Beam. They developed a deep sea robot for decommissioning oil rigs or something. And it was looking at like a 7 or 8x on paper. They were going for the 100 mil, like big Series C or D round. And it's bankrupt and gone, like literally within 4 weeks. And it turned out that the C-suite of the business had been cooking the books in some way to try and get the finance through the front door.
Right.
And someone eventually found out, there was a whistleblower. I don't know exactly the details, but the point was, is you went from thinking, oh, this is my breakout angel investment, great. And within 4 weeks, there's nothing on the balance sheet. It's gone. And I wonder if you're building a Bitcoin-backed business with a sound money and sensible thinking founder, do they find themselves in that crazy situation where it's like, you've got to get the funding round, you've got to get the metrics up as easily or not? I.e.
I
that
think almost
fiat
certainly
building
not.
block,
I mean, it's
right? It's
obviously
almost certainly
possible.
not. I agree.
Yeah, it's obviously possible, but I think the kind of person who ends up in that position is so predisposed to thinking about all of this seriously
Mm,
that they wouldn't even. I mean, Alex is an interesting example just because I know he has made all of the following explicit. Like, you could talk to him about the following for hours,
mm,
that explicitly contrasting it to exactly the kind of thing you described, right, with the accelerator or just any typical whether literally in Silicon Valley or just influenced by all of the tropes that have come out of its, on paper success. You can have that attitude where you've critically analyzed all of this, and you're almost deliberately doing the opposite of you're like trying to unlearn all of those lessons. But I think the really nice thing is that you don't even need to necessarily. Like, there's nothing wrong with that. I probably encourage it. Like, obviously I've done that, we're kind of doing it now, but the more interesting point to my mind is that by taking Bitcoin seriously, you will arrive at all those conclusions organically, right? You don't actually even need the explicit counterexample. You just are almost by being forced to, and I'm kind of oversimplifying this a little bit, but just to tie it in with what we've already covered, by being forced to think about opportunity cost, right?
mm.
Everything else follows. It's logically coherent, provided you don't have these distortive distractions.
Mm. Yeah, I mean, distortion's such a good word, isn't it? And it's absolutely everywhere.
Mm-hmm.
Alan, what I'd love to understand. So you're doing a raise at the moment for the fund?
Yes, I am somewhat limited in how much I can say about that publicly, but just
Okay.
for regulatory reasons. I don't want to get you in trouble or me.
No, that's okay. It was a general question, which is basically, as a VC fund, um, how easy is it to raise funds at the moment, and what are the type of investor that you guys have in the fund? Are they generally private investors or institutions, and what's the appetite for this
So
kind of thing?
I don't think I know the answer in general because our experience is extremely specific. So we're currently raising our second fund. When we raised our first fund, it was absolutely miserable, and the timing is quite funny in
Really?
hindsight.
Wow.
So
Well, tell me
we
about that first.
we left our jobs. I have a co-founder, so I'm saying we left our jobs in at the end of March 22. Set up Axiom, started trying to raise. I don't know how well you remember this timeline, but for me, it's like I remember it to the day, pretty much. In May 22, you had Terra Luna was the first to implode, and
Yes,
then that set the
yes.
dominoes going, and you get
Celsius, the whole
Voyager,
shebang.
BlockFi, Celsius, whatever else. Um, FTX, we now know, should have died then,
But
but
they've been buying on their own
basically
book,
like
yeah.
defrauded its way out of bankruptcy, but then did die in
Anyway.
November. And so the result of that was the first 6 months or so of us trying to get going was just completely miserable because nobody wanted to talk to us. And in a way that was really kind of bittersweet is maybe the best way of putting it. So the co-founder, by the way, I don't be jumping around too much, but I think this will be meaningful to you and your audience. The co-founder was also the co-author of Only the Strong Survive, right? So this is kind of our prime, branding. Like, we were trying to ride the wave of its success to some extent, just because it was very well received. It was very popular. If the audience doesn't know, this was a paper that we wrote in across the summer of 21. We published it in September 21. That was basically arguing that DeFi is bullshit. This is all going to implode. None of it makes any sense. And then it did. It did all implode. Like, literally everything we said came true. And yet, so with that as our, like, going into conversations, thinking, oh, aren't we clever? Like, we predicted this whole mess, not realizing that the people we were speaking to are completely unaware of these subtleties, right? So to them, Bitcoin is part of crypto. And so we're trying to say to them, look, aren't we smart? Because we predicted everything that's happening right now. And we said a year ago, the only sensible way to play it is Bitcoin, which is still working, and that's what we want to do. If you're to, if you want to invest with us, like that, this is our entire thesis. And we thought that would be really compelling, but actually, to them, it's just like, no, we don't do crypto. Are you insane? Go away. We're like, no, but you don't understand.
Yeah.
It's not crypto, I promise. So that was horrible. I mean, we muddled through. We got the fundraise. We made a whole bunch of deployments. I think it's going to do really well in the long run.
But it's a very entrepreneurial process starting a fund. Like, everyone thinks of the fund as just an investor, but actually it's extraordinarily entrepreneurial on the other side. It's like, you guys are raising money from other people. You've got to sell the opportunity as well.
Exactly. Yeah, we got to sell the opportunity to TradFi people who've just seen FTX implode. They don't really want to listen. So with that as our benchmark, this time around has been so much better. In large part just because of time. Like, we're not being at that exact moment is helpful because this isn't fresh in everybody's memory anymore. And obviously a bunch of other stuff has happened recently, which we joke about this internally that, we don't really, for probably pretty obvious reasons, we don't care about ETFs or strategic Bitcoin reserves or whatever, all of this like TradFi encroachment that has happened in the past few years. But we're kind of grudgingly resigned to accepting the credibility it brings, right? So we don't care, but the people we speak to massively care. So we find ourselves having to talk about that more often than I guess we would like to. And then we kind of steer the conversation to things that we find much more interesting. But yeah, with that setup, this time around, it's been much nicer. And I kind of feel like, I hope I'm not being overly naive about this, but I think it will just get easier and easier because it will become more and more obvious over time that not only that we're right, but that we've been right for a long time. And we'll start to get various data points that actually prove this rather than just like, oh, look at this tweet I sent in 2019 that turned out to be right. Or even the paper to a large extent, right? Because as well received as we think the paper was, it wasn't tied to like a trading strategy or anything. I mean, it would have been amazing. We joked about that too, that like we should have just had a only the strong survive fund, which is like long Bitcoin and short a basket of everything else. But with all of this in mind, it seems obvious that it will just get easier and easier. And even that, I would suggest, by the way, is tied in with what I mentioned maybe 10-15 minutes ago, that the kind of romantic spin on all of this is it's just temporal arbitrage. And eventually we put ourselves out of a job because by the time everybody finally recognizes that we were right, the result of that in the market is everything is repriced and our fund has done phenomenally well. And we're just like done at that point.
Yeah, it's interesting to think about what that scenario might look like. And I'm intrigued in terms of the process of actually setting up a fund. Was it a difficult thing to do? And
it's you honestly don't want to go too far down this line of questioning because it's so boring. It's not like controversial or anything. So I'm not meaning to like cut you off. But
no. I'm intrigued. That's all.
It's just paperwork and legal expense and like you shouldn't do it unless you are very confident that you have investors coming in to, because the way, maybe one interesting detail, I don't know if people know this, but all of the expenses that are involved in setting up a fund, it's typical to consider them expenses of the fund, right? So it's kind of de-risked from that perspective. But you do therefore need the fund to eventually exist, right?
Yes. Yeah,
so
you need to raise the funds
it's not completely de-risked because you will be on the hook if you then don't raise any money, which is kind of scary. But that's basically it. It's just like a lot of like, this is an amusing note to end that point on, that it's all very fiat, right? It's like, it's because our fund, and just like almost every venture fund, as far as I'm aware, is, it's dollar denominated. It's very much within the fiat banking system. We have a bank or a bank account for the fund. We have what's called a fund administrator. It's audited, blah, 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 blah. It's all very fiat. Like, what can I say?
Well, maybe I'll bring the conversation towards a close, Alan. I'd love to ask one more question, which for me is one of the best. And you don't have to answer this, but I always
Okay.
love the
We'll edit
yeah,
this if not.
yeah, we can edit this out. Yeah, like ask a man what he owns, not what he thinks. And um, today I would probably be about 80% Bitcoin myself personally, but I'm
Mhm.
interested to make some more speculative bets, and hence my interest in Atlantis. And
Mhm,
it
mhm.
would be like a small percentage that I'm actually looking at deploying. Is that how you would frame an investment in Axiom as well? And do you yourself
Oh,
take
sure.
positions
Yeah.
in the companies?
So the way I would frame an investment in Axiom, I touched on some of this before, so I can go through it pretty quickly, right? So there's a few points you have to keep in mind. One, we don't hold Bitcoin. I've explained why. Two, it doesn't make sense that Bitcoin fails and yet we succeed. So you have to see us as like a subset of overall Bitcoin's success.
Hmm.
Now, the rationale within that to invest, I mean, you could come up with whatever rationale you want. The rationale that I think makes the most sense is as follows: if you believe in Bitcoin, you, I think, by necessity need to believe that we need significantly more infrastructure around Bitcoin in order
Hmm.
for adoption to grow. I think you could even argue that that's kind of true by definition, because if we didn't, then it would have happened already. That doesn't quite, it's not like a logical proof or anything, but it's, to me, it's pretty compelling. The final leap that is maybe a bit trickier, that really does require people, I think, to understand Bitcoin, like no complete noob, no coiner is really going to follow this, is that the companies that do the best, that are most successful at building out this infrastructure that ultimately does enable wider Bitcoin adoption. What wider Bitcoin adoption really means, I think the only way that you can quantify it is uh, whether individuals or companies or nation states eventually maybe moving to a Bitcoin standard, right? So actually using as Bitcoin as money, therefore moving to a Bitcoin standard. So the companies that best enable this are the most influential, let's say, in enabling this transition. I think it stands to reason will be amongst the first, if not the very first, to themselves go on a Bitcoin standard. And so this goes back to the point I was making about what we think the various tailwinds are going to be in the portfolio. We have the one that we had the interesting little tangent on around the discipline and capital allocation. That's not exactly what I'm talking about now. What I'm talking about is more the tailwind of Bitcoin itself. That's how I think it ends up being reflected in our portfolio. So
Hmm.
you believe in Bitcoin anyway, but you recognize that a lot needs to be built to facilitate its continued success. And whoever does that building the best disproportionately benefits from that success. And so that's the rationale for, obviously, we can't guarantee such a thing, but we think it's plausible that we can outperform Bitcoin. That's not even necessarily the reason you should. So, I mean, you could interpret that as like, okay, well, I want to outperform Bitcoin, therefore I'll do it. You could view it a bit more holistically, though, as actually, because I'm so invested in Bitcoin's success, whether literally in terms of like, oh, I own a lot of
Hmm.
Bitcoin, or just I want this to happen, I recognize the need for this infrastructure. And so I'll invest for that reason, not necessarily as like a charitable, like, I'm just throwing money away so that Bitcoin ultimately wins. Because obviously we have the angle I just described, that you're financially aligned as well. But you could even conceive of it as a kind of, this isn't a perfect analogy, but like insurance on the rest of your stack,
Hmm.
right?
Hmm.
It's like, say 1% of your Bitcoin allocation goes towards this. That makes the rest of your 99%
More
significantly
valuable.
more than
Yeah.
1% more valuable. So that's another rationale that you could use.
And this is not a perfect analogy by any means, but someone once said to me, it's like having a car parked in a driveway, but with no road network. It's like someone's got to go and build the
Yeah.
roads
Yeah,
in
I like
order
that.
for
Yeah.
that car to have its
it's
true
it's a
value.
little bit tricky, like this. So this is a really interesting line of conversation that actually you need to know quite a lot about Bitcoin to get into. We rarely would in conversation with like a more institutional prospect for an
Yes.
LP in the fund. Hence it's fun for me to actually tease
Yeah.
out. But while I agree with that, you have to be careful of what the implications are, because I think a huge amount, I threw out the word infrastructure without really defining what I meant by that. I assume people probably kind of intuitively get what I mean. Um, but I think a lot of the infrastructure And arguably the most important infrastructure won't be in the form of companies necessarily. It will be free and open source software in exactly the same way that Bitcoin itself is free and open source software.
Wow,
So that
interesting.
could be, I think you've got to be careful that that's a potential kind of siren in a way, if that's useful as a metaphor. It's like you can't get too excited about, on a relatively strict basis, deploying capital into the infrastructure. One way actually of just capturing this really nicely is just as a reflection of what we try to do within the fund, or now funds plural. We don't just invest in anything, right? Like we try to have a relatively high bar for what we're investing in. It's like, it's not good enough to just be vaguely connected with Bitcoin. There needs to be, I touched on some of this before, I won't dwell on it for too long now. There needs to be a coherent rationale, not just, I mentioned before, plausible case to outperform Bitcoin, but where that actually comes from in terms of the unit economics of the business, rather than basically just being like, because we unfortunately do see this quite a lot. We see proposals, but we don't invest, and our feedback is like, sorry guys, this shouldn't be a company. Like, this should just be a project. And there's lots of extremely successful free and open source projects in Bitcoin that I think create an enormous amount of value for the ecosystem as a whole, and drive the whole mission forward. But it's critical in some sense that they are projects and that they aren't companies, because it would simply be like the incentives wouldn't align. They would break if you tried to make them as companies. So you need to be a little bit cautious about this. And you need to not throw money at absolutely everything that has Bitcoin on it. I guess here's one interesting interpretation of this, actually, that there's a very intellectually interesting challenge in right now investing in Bitcoin companies. But I think it's a very similar point to what you mentioned around the necessary proliferation of the attitude of treating Bitcoin as a cost of capital. So the point about the founder's discipline, you understand why that would start in Bitcoin companies, but it's going to have to grow beyond that. It's going to end up becoming prevalent everywhere. I think this is also true. I think there's a lot of really unfortunate heuristics that, again, I'll just kind of lazily blame Silicon Valley for, right? There's a lot of heuristics around software investing that maybe make sense pre-Bitcoin, maybe make sense in a kind of, quote unquote Web 2 environment. There might be some technical reason for this, but there's also probably, like, in large part, it just comes from fiat, right? It comes from endless funding encouraging capital misallocation. The way that Bitcoin works, even aside from the point about discipline capital allocating, this is like more of a technical point about encouraging and in some kind of more vaguely defined sense, rewarding free and open source development. That has to be taken a lot more seriously now than in let's say, a non-Bitcoin fiat influenced context. So there's an interesting challenge there for us, for sure, just in terms of thinking about what even constitutes this infrastructure in the first place.
The altruistic side to that also gets a little more complicated, because in some ways we do just have to donate capital to make cool things happen. This actually came up in a podcast I was doing yesterday about the Medicis and the Sistine Chapel. They were extraordinary capital accumulators, and they spent their money on projects that created extraordinary things because they were able to have 100, 200 year long time horizons. And so the output of those projects, quote unquote, are very different, but just as important. Alan, it's been awesome to speak to you.
Just maybe tie it back to Bitcoin is Venice, right?
Yeah, there you go. Alan, great to spend some time with you. Thank you so much for everything you shared today.
Yeah, this is fantastic. Really enjoyed the chat.
And just a final question. If anyone wants to reach out and get in touch, what's the best way to do that?
You could do Twitter. I'm Alan F32 on Twitter. You do Nostr as well, but I have no idea how to redo my input.
It's a long one.
So you'll have to figure that out on your own. And then the Axiom website as well. I'm sure you can put that in the show notes or something.
I can, yeah, absolutely.
Axiom, so AXIOMBTC.capital. And there's if I guess if it's something more venture related, there's contact forums there. That might be a more appropriate way.
Awesome. Well, Adam, thank you so much for your time today.
Yeah, thanks, Jake.